has been in construction business. High-tech contractors limited have been in construction business for many years. The following information relates to one of the construction contracts, and you say for the year ended 31st December 2023. So the examiner gives us balances. The examiner tells us balances. The examiner tells us balances as at 1st January 2023. Those are opening balances. So that is deck 2024, 5D. Very fast. So on it, please very fast so that we proceed to. Are we on it? If you're on it, we'll respond to this. So I've been told that High-Tech Contractors Limited has been in construction business for many years. The following information relates to one of its construction contract for the year ended 31st December 2023. So being told that material on site, that is the opening balance, that is an allowable expense, we're going to adjust that. We have a figure of 30,000. That is rounded off, that should be 30 million. Then we have what we call accrued wages. Wages is an allowable expense. We are going to adjust in the question. The figure is 2 million rounded to 1,000. So the next we have what we call rent prepaid, and we're told contract related. When you're told rent paid and you're told contract related, is that an allowable expense? Are we going to use it to adjust an allowable expense, which is called rent? Yes, because it is contract related. So the next item is what we call planned written down value. The figure is 20,000. What are we going to do with that? Planned. We have it as planned. What are we going to do with it? We are going to claim investment allowance. We are going to claim what we call investment allowance at the rate of 10%. Then the examiner tells us that transactions during the year. One is material sent to the site. We have material sent to the site. The figure is 100,000. The figure is 100,000. So material, that's an allowable expense. We are going to adjust. We are going to adjust to basically get the material for the year. Then we have plant purchased. Plant purchased. We are going to claim investment allowance, add it to the written down value at the beginning, and claim investment allowance at the rate of 10%. So the next is what we call wages paid. Wages paid, is that allowable expense? Is that an allowable expense? Yes, that it is. We adjust it with accrual to get the wages for the year. Then you have what we call the inspection fee. Inspection fee, is that allowable expense? Yes, that's allowable. Then we have subcontractor's fee. Subcontractor fee. Subcontractor's fee. So that's allowable expense. Then you have material sold. So material sold, we are going to use it to adjust material for the year, which is allowable expense. Then you have the next, which we call cash on labor. Cash on labor, is that allowable expense or non-allowable expense? That's allowable expense. Then you have head office expenses. We have what we call the head office expense. So head office in the branch, that's allowable expense. Then you have the next called deposition and into bracket provision. Is that allowable expense or non-allowable expense? Into bracket, is that allowable or non-allowable expense? That's a disallowable. So non-allowable expense. Then you have the rent paid, and the examiner is very clear, saying non-contract related. The figure is 8 million, rounded to 1,000. That should be 8,000. So we have the rent paid, and the examiner says non-contract related. Are we going to include that? That is a disallowable expense. So then we have what you call, we have what you call other expenses, and we call them allowable. Is that allowable expense? Other expenses. Other expenses. That should be allowable expense. Then we have what we call the value of work certified in the year. 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 So that is constitute the taxable income. Then we have cost of work uncertified. We have what's called the cost of work uncertified. 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 The cost of work uncertified, that is not going to be included. Are we together? That would basically, then we have cash received from the client, cash received from the client, cash that is received from the client, that is not going to take part in any. So then we have what we call material on site. We have what we call material on site, that is at the end. We adjust to get what we call material cost. Then we have what we call accrued wages. We adjust wages. Then we have rent accrued. We adjust the rent expenses. So additional information. So investment allowance agreed with the Commissioner of Revenue Authority, agreed with the Revenue Authority, is at the rate of 10%. Agreed with the Revenue Authority, we say is at the rate of 10% on plant. So we claim it at 10%. Then you say that the company's policy, the company's policy, the company's policy, the company's policy, the company's policy recognize 2/3 of the annual profits when they arise for tax purpose. That it is the company's policy to only recognize what you call 2/3 of the profit when they arise for tax purpose. They need to make sure that any contract loss are recognized in full in the year of occurrence. So the first one, you're being told, you're told to compute contract profit or loss for the year ended 31st December 2023 for high-tech contractors. That is 6 marks. So we have what we call the high-tech contractors. So we have what we call the high-tech contractors. High-tech contractors. We're told to get the taxable contract profit and loss. You say as at we have it 31st of 12 of 2023. That should be that here. So we have the taxable income, that is the value, we call it value of work. Value of work certified. So what is the value of work certified? Give me the value of work certified. The value of work certified. The value of work certified. So what is the value of work certified? So the value of work certified is basically 120. Together, that's 120. And we say less what we call allowable. less what's called allowable expenses. So the first expense we have material. We start with the material. So we have into bracket, we know that material at the beginning is 70. We add to material that are bought. How much materials are bought? Plus 100,000. Plus 100,000. Is there any material that is bought? We have material sold, you less 1.5. Then we less the closing. We have the closing, which is 50. So what is the material cost? So the value for the material. So material sold and closing stock. So we get the material for the year, cost of material for the year. So give me that. Give me that kindly. So that should be 78. So then we have the next, what they call the wages. And have the wages. So what is the wages for the year? Wages paid should be, we have a figure of 8,000. That is for the wages paid. The figure of 8,000 for the wages paid. For the wages paid. For the wages paid. For the wages paid. A figure for the wages paid. For the wages paid. So for the wages paid, what is accrued carried down? Accrued carried down is 4,000. Then you less accrual for at the beginning. How much is accrual at the beginning? Balance put down, that should be 2,000. So what is the wages? What is the wages? What is the wages? So that should be 10. So then we have the next, what you call the next should be, we have the rent. We have the rent. So do we have the rent paid that is contract related for the whole year? I hope I've muted everybody. Do we have rent paid for the whole year? Do we have the rent paid for the year? We don't have the rent paid. So how do we treat rent brought down? Prepaid is addition. So prepaid brought down, that is 4K, that is an addition. Then look up down there, accrued. When you have accrued rent, that is also an addition. This is prepaid, prepaid brought down. Then you have accrual carried down, accrual carried down. So we are also going to add the accrual carried down. So what is accrual carried down? Give me that. Accrual carried down. The accrual carried down, provide that for me. So that should be 9K. That should be 9K. That should be 9K. So then we have what you call, the next we have investment allowance. So we have the investment allowance, that is the plant.